Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, we're joined by the CEO of Riot Platforms, Jason Les. We're going to be covering everything from Q1 earnings to an update on their Corsicana facility, their ATM program, and executive compensation. We've got a lot to go through in today's presentation, but before we do, please take a second, hit the like button, you guys. It's a big help to myself and the channel, helps push this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Riot, what you thought about their Q1 results, and how you think they stack up to the rest of the Bitcoin mining companies we cover on the channel. Now, with that being said, let's get into today's interview. Okay guys, so that's right, back by popular demand, we've got the CEO of Riot Platforms, Jason Les, on the program. The main focal point today, Jason, is obviously going to be Q1 earnings, but there's so much more to talk about in the Riot story. We've got updates on Corsicana facility, the growth, the ATM plan. A number of questions actually came from the subscribers, so we really appreciate your time and looking forward to the discussion today.
Yeah, well, thanks for having me on, Bryce. Looking forward to getting into it with you.
Definitely. Now, I'll warn you now, Jason, there's definitely some harder questions in here, so don't want to be hearing any comments about softball questions today, you guys. But first things first, Jason, why don't we kick off with some of the highlights from your recently announced Q1 results?
Yeah, absolutely. So Q1 was a record quarter for Riot in terms of net income. We reported $211 million in net income. Of course, a big part of that was driven by the mark-to-market gain that we now get from Bitcoin that we hold on our balance sheet. I know something that you hear us talk a lot about is the balance sheet strength being one of the pillars to our strategy, holding Bitcoin as a Bitcoin company, one of the pillars to our strategy. And, this helps drive these results. Of course, it cuts both ways now with these new accounting rules. If there's a downturn in Bitcoin price in the quarter, then that works against us. But with our long-term belief in Bitcoin, we believe holding Bitcoin on our balance sheet is going to continue to show gain over time, the short-term variance notwithstanding. Other important highlights to get into, we had a direct cost per Bitcoin of $23,000 per coin, 16,800 of that was from energy costs. So one of the other things that we always talk about is having this low cost of power to drive that low, at least electric cost per Bitcoin. So that's 16,800 per Bitcoin, of course, pre-halving. That's an advantage that we're looking to replicate at a wider and wider scale. That's why we're scaling up Rockdale, and that's why we're building out this new Corsicana facility. And especially with the third quarter coming up here, where the bulk of the results from our power strategy are realized, we're really optimistic about what we're going to be able to do with this low direct cost of power, leveraging up. This is a big year for Riot. We've been building this new facility and making all these moves to add capacity for quite some time. We haven't seen the results of that yet because this new facility has just been energized. Now we're scaling up here. Now we're starting to see that coming forward. And positioning us to really act on that full opportunity is, once again, the strong cash position that we reported at the end of the first quarter. So having a strong cash position, having this low cost per power, having this scale, this pipeline of growth that we're able to act on, really positions us to leverage our advantages around Bitcoin mining, show this efficiency with this energy cost per Bitcoin, and fulfill our mission of capturing this upside with Bitcoin.
Sure. Yeah, great intro, Jason, and a lot to be excited about. Like you say, you've got the summer season coming on when you get the power credits. You've got Corsicana energizing. And then obviously with this kind of a balance sheet, we just saw Stronghold Digital Stronghold put themselves up for sale. I can only anticipate you guys are looking at a lot of M&A opportunities and activity right now. We're hearing that from a lot of the CEOs, so we'll get into that a little bit later, but definitely a big year for Riot. I know last time you were on the program, we talked about 2024 as really being the year we step on the accelerator here in terms of growth. So let's get into some of that, Jason. So you talk about Q1 earnings. You even noted this, but I think around 234 million of that net income was unrealized gains on your Bitcoin position as a part of the new FASB rules, which you just discussed. What do you think held you guys back, or was there any financial challenges during Q1 that would have prevented this from being a loss had it not been for those FASB accounting rules? And then as a follow-up to that, in Q2 here, now that the Bitcoin price has pulled back, where do we expect the remainder of the year to land in terms of net income if Bitcoin doesn't go on the run a lot of us are anticipating here?
So a lot to unpack there. So a few thoughts come to mind on the first part of your question. And I think what I'll start with is we've stated our goal is 100 exahash. And what we are doing is building into this 100 exahash building. We've built this foundation to be a company a lot bigger than what we are. And I think that increasing production, getting our hash rate up here and mining more Bitcoin as a result, that is going to be the primary driver of improving our financial results here. And I know that sounds kind of obvious, but I say that in context with the first part of the point I made, in that we have these expenses that have been built out, and we're now realizing for this bigger business, and now we are trying to move production up into that we see that with what we're doing at Corsicana to upgrade, at first at Rockdale, and what we're doing to upgrade and grow our fleet there, and then what we have at Corsicana scaling up. Of course, we're incurring costs around building up Corsicana even before the actual operations have taken place there. So I think that's the main point that I want to make here is we talk about Riot Platforms as an institutional Bitcoin mining platform. And what that means is we've built out a lot of this infrastructure that we are now scaling up our operations into. And then we believe we are going to demonstrate very strong results from that. And those results will be realized and recognized. Now I can go into a couple more details about what may have impacted financial results in the first quarter. First, the engineering segment didn't perform well. And that's really kind of due to supply chain issues. First, I'll say the reason we acquired ESS Metron and brought this engineering segment into Riot was not because we were looking to get into the manufacturing business, but it was to bring those strategic advantages into Riot. We've realized savings on our build-out costs from doing that, and we have gained greater visibility into our own supply chain by doing that. Riot's able to make these kind of custom designs that we need for our infrastructure. We're able to move quick and pivot because we have this engineering segment in-house. But their results with customers outside of Riot were impacted in the first quarter. They basically have a couple of very large orders that they're moving through the warehouse. And I think a good way to picture this is there's this big manufacturing facility. There's only so much they can work on at one time. So when you have two massive orders, those are the only two main things you're able to work on in that period. And because some of the input components into those orders were delayed, they were not able to complete these orders. And the way we recognize orders is the way we recognize revenue in that segment is when the orders are complete and shipped. So because they're not shipped, even though we're working on them, we are not able to recognize that revenue. We're solving that supply chain part of it. They're getting the parts they need. We're actually expanding warehouse space so we can do more jobs at once. And then once those orders move through here in the year, and then other orders from the backlog with better economics start getting processed, then we're going to see better results in the engineering segment. So that is really temporary in nature and something we have the plan in place to work through. The second point I'll make about impacting results is one of the things that was a big highlight in our first quarter is that we eliminated our data center hosting segment. So Riot, as background, inherited 3 third-party customers when we acquired Whinstone US in the Rockdale facility in May of 2021. One of those agreements was terminated shortly after closing, and then 2 of the remaining agreements were terminated towards the end of the year of 2023. One of those agreements is still in operation, so it's it's not material now, so that's why that segment was eliminated and all brought into Bitcoin mining. But that's still something that you can kind of see as having a strain on our results. We recorded, I believe it was 3.8 million in revenue. In our Bitcoin mining revenue, 3.8 million of that was from a third-party hosting customer, but we incurred a cost of 5 million to deliver that. So this is going through litigation. We're working through this, and we can't give kind of an outlook on what litigation timeline looks like, but we're looking to resolve this and move forward.
Gotcha. Okay, and we'll get into the Corsicana and the growth in subsequent quarters in a second here, Jason. But I wanted to talk about the hosting because we just got a question about that actually. And I know in our initial discussion, maybe 2 or 3 meetings ago, you had said the hosting was, you understood it wasn't profitable, but these were legacy contracts. There was legal obligation there, and you just kind of had to run its course. Now you've wound that up pretty nicely. I think probably most investors are happy with that move. But in terms of the engineering, they did make a loss, I think, of about 1.34 million. So it's not overly substantial compared to the numbers we're looking at here. But just to be clear, you're saying that will turn around towards Q2, Q3, or are you looking at that one as kind of just the tertiary benefits that you described earlier?
No, that's absolutely temporary in nature. This is really just on these 2 very, very large orders that we have here. Much larger than an average order that business encounters. Those have just been held up by these temporary delays in components. Once those are received, these orders are completed, then they're recognized through revenue. We're expanding the warehouse space. We'll be able to bring in more orders and get those processed as well. So I really look at those as temporary in nature that we expect to have resolved, by the second half of this year. And I realized I misspoke slightly on the hosting business. In Bitcoin mining revenue, 3.2 million of that revenue was from a hosting customer. I think I said 3.8 before.
Sure.
Yeah.
No problem. Thanks for the correction there. So talking about balance sheet strength, Riot is obviously in one of the top positions in terms of cash and Bitcoin or cash equivalents. Very strong balance sheet going into halving and obviously now post halving for whatever growth or M&A opportunities arise. Now, one of the questions that came up, Jason, in your guys' investor deck, you show a slide talking about the fully funded growth of Riot, the position cash versus Bitcoin, and some of the incremental spends or activity that you guys have planned on the roadmap. So the question from the subscriber was, based on this chart that we're showing on the screen here, it looks like you guys had sufficient balance sheet strength to fund the growth that you had communicated. What was the need to go forward with that additional ATM in 2024? I think just under 15 million shares kind of from March 31st through to April 30th of this year. What will that money be used for? And I know you were just talking about the 100 exahash goal as well in the intro there.
Yeah, so the balance sheet, once again, one of the pillars of our strategy. That is one of the things that has enabled Riot to be successful and to scale and to get to the point that we're at today. We have been running this strategy for years. The reason that Riot now has a pipeline of growth, 1 gigawatt that we're able to act on at Corsicana, is because of the balance sheet strength in the past and because we've continued to build. And now here we are today with Bitcoin price appreciating, ETFs, lots of optimism around this, and we're able to act and scale when capacity is constrained for many others in the industry. So Riot ended the first quarter with 688 million in cash and about 600 million in Bitcoin. So, 1.2, 1.3 billion in net liquidity based on the Bitcoin price at that time. It's a very strong balance sheet to be in. The reason the balance sheet strength is important is because we always want to be in a position to act on the opportunities in front of us and not have the requirement or the sudden pressure to raise a bunch of capital to act on something. So we have a slide that shows how our growth plans are fully funded for 2024, getting the first phase of Corsicana completed, 400 megawatts, and getting to 31 exahash. And then that slide also includes another 200 megawatts and getting to a little over 40 exahash. But that's not the end of where our growth plans go here. We have an agreement with MicroBT, this long-term purchase agreement, where we have an option to add 75 exahash of additional equipment, latest generation equipment, capped at a price of $16.50 per terahash. We think that's very valuable. You combine that with the additional 400 megawatts, even beyond what's laid out on that slide, that we can build at Corsicana, and that's a lot more growth that's in front of us. We don't want to be in a position where we are not able to continue to leverage our advantage with our low cost of power, leverage this advantage where we can effectively be accumulating Bitcoin at a discount to its market price because we don't have the cash at some point in the future. We build this foundation first, and this allows us to act on these opportunities. So to sum up that point, yes, growth plans for 2024 and 2025 as laid out are fully funded, but we have a lot more opportunities in front of us that we've shared with the market that we want to act on. So we want to be prepared and be in a position to continue acting on those opportunities, scaling and activating this growth to really get our hash rate and production up there. The other component of this is M&A. We want to be in a position to act on the right opportunities when they arise. We don't want to be in a position where an opportunity comes up and then suddenly we have to do a more onerous deal. Riot has not done overnight financings where they're done at a discount to the market price and there's a bunch of warrants on all those all these kind of things. We've leveraged an ATM program really on high volume days to add cash at those points in time where we're able to beat the VWAP and kind of creatively bring cash into the balance sheet. So we're really strategic how we think about that. And with this balance sheet strength, with this balance sheet first approach, Riot is able to continue to scale, take the opportunities that it's presented with as a leader in this space, and really do exciting things and build their business up to the scale that we think we need to be successful.
Sure. Yeah, and I can appreciate the proactive nature, having this stuff in place before you need it rather than waiting for a deal and then being reactionary, Jason. So that does make sense. An extension of that question is talking about the pending shareholder vote to increase the share count to 680 million shares. And then I guess the follow-up to that would be, are there going to be additional ATMs in 24, 25, or is this what you're saying, basically, this is the big round of funding that's going to fuel the growth right through this cycle?
So increasing the amount of authorized shares just gives us optionality there. Increasing the level of authorized shares does not mean those shares are going to be issued, does not mean that there's any compelling obligation out there around those shares. We're seeking shareholder approval to increase the number of authorized shares so we can use them if the opportunities come up. This can be, once again, M&A. We're using our shares as consideration in some type of deal. Then having additional shares authorized helps us do this. And then, yes, if we are going to need additional financings in the future, then we would need additional shares authorized to do that. I think what Riot has demonstrated, though, is that when we have brought cash into this business, we have directly put that into growing operations. And those results don't always happen quickly. Like we've talked about, we've been building Corsicana for 2 years. We've only just started to have the hash rate come online in the past few weeks, and then that's scaling up this, going forward for the rest of the year. So we put this into growing and scaling our operations, and what we see as a very strategic way, leveraging our low cost of power, leveraging the access to power capacity that we have. And it's not always instant, but I think our track record is very clear of how we have put this cash to use.
Gotcha. Now, I want to touch on the M&A portion a bit here because obviously there's a lot of speculation in this sector. We just had Griffin on, Rob Chang from Griffin yesterday, talking about from a smaller miner's perspective, their growth strategy, potential of mergers and acquisition activity at that level. I'd be curious to hear your thoughts, Jason, on the other end of the spectrum as one of the biggest players in this space. Rob said he's spending up to like 70% of his time on M&A based due diligence activity right now. Is this making up a big portion of Riot's day-to-day?
As you can imagine, Riot's position in this space as one of the leaders, we get exposed to everything that comes across. So we're working with advisors. We have an internal team, a corporate development team focused on M&A, working all the time and looking at this. So I do spend a lot of time looking at these deals. We're very disciplined, though. We don't need to do M&A for the sake of growing. I know I'm always a broken record with Corsicana, but we have this 1 gigawatt pipeline that we're able to build out totally under control, not having to take third-party deal risk, et cetera. We know what we have in front and we're building out in front of it. So with that lens, it really drives a lot of discipline on the types of opportunities out there that we look at. We look at everything closely, though, and we look at things that are both, facilities, companies. We look at businesses that are kind of support the vertically integrated strategy. We look at a lot of different things here, and it's a part of realizing this Riot Platform's vision and building this bigger and bigger institutional grade mining company. So yeah, I think it's going to be interesting to see what happens here with M&A. I think there's historically been a very large bid-ask spread. What buyers are willing to pay and what sellers are looking for has been really wide. Now with the halving, I think there's more discussions going on around this. People are looking at M&A maybe a little bit closer, maybe considering when they wouldn't have before. But once again, it should not just be a game about scale. It should not just be a game about doing a deal just because it would make A and B a bigger company combined into C. You really got to look for something that brings an advantage to the table. Does this counterparty have access to scale? Does it have access? Does it have a cheap cost of power, which is becoming more and more important in this new epoch that we're in terms of block rewards? It requires a lot of discipline. So in our view, having a strong team is one of Riot's key advantages. We're able to run down a lot of potential opportunities with a lot of detail, and then either decide they're worth pursuing or move on to looking at the next one.
Makes sense. That's exactly what we heard from Rob as well. He said a lot of the sellers need to get a bit of disappointment. A lot of the private companies are looking for public comps, and it's just not going to happen when we can see a lot of these companies like yourself are able to build it cheaper than a lot of these companies want to actually purchase. And Jason, you're right. You do bring up Corsicana obviously a lot, and rightfully so, but we're hearing from a lot of the CEOs that it's getting very difficult to find access to big amounts of power, especially where there's infrastructure, where there's labor, and where there's going to be contracts in place to have the kind of growth that Riot gets. So I definitely think having that future mapped out and in one location is beneficial, and what a lot of people are really drawn to Riot for. So I'll give you credit there. Now, moving along, Jason, to the next part of the question here, stock compensation. So I'll just go right out and say this one. Earnings update came out, $32 million was allocated to stock compensation. That represents about 40% of revenue in quarter. Can you help us understand? Obviously, this sounds and looks like a big number from the outside. What does this mean? How is this being used? How is it achieved or unlocked? Can you give us a little bit more detail on this number we see?
Sure. So our equity compensation program is now largely around what we call our 2023 long-term incentive plan. So this is a plan that rewards both service for the company, through a number of years, through 3 years, but is primarily focused around performance objectives. Riot outperforming Russell 3000 benchmark, or either meeting or outperforming that metric to get the maximum reward. This is a program that we introduced last year, and all employees in Riot participate in it. So there are hundreds and hundreds of people that are in this program that are tied to the success of the company and are incentivized to perform and appreciate in the success of the company if it meets these targets. Now, something to note about how the financial reporting for this works. This is expensed at assuming the maximum of the award opportunity is achieved. Whether that will happen, we won't know until 2026. This is a multi-year program. This expense is amortized now, though. That's what you see there in that stock-based compensation expense. That was not paid out to people. It's not like employees received this. The performance portion, that is not paid out until 2026. So if you are still employed here by Riot in 2026 and we achieve that maximum objective, then you would be eligible to receive that award. That's a lot of ifs, though, and we're talking a lot of time, in the future.
And
in
Jason,
the meantime, though, this expense is amortized on a quarterly basis. Whether or not we'll be successful, of course I hope so, but it is always, to be seen. One data point I would point to is we had a performance stock plan we introduced in 2021, and that had targets around building out infrastructure, reaching exahash, and reaching adjusted EBITDA. And at the time, people saw that and they're like, wow, this is a big stock-based compensation expense. Well, we didn't end up achieving, those goals. We unfortunately only achieved a minority of those goals, and that expense was ultimately reversed. Those shares were forfeited back to the company, and the employees, the executive, did not earn those shares. We have this new plan going forward now, and it's tied to total shareholder return, very common metric that various institutional investors and proxy advisors are looking at. So we're expensing this now. You're seeing this amortized. That once again, if we achieve the maximum opportunity in that program, and for our shareholders' sake, we hope we are successful in hitting those goals.
Yeah, I wanted to ask, I appreciate the context there. So just to clarify, so this is a 3-year incentive program for all employees of Riot, and it's based on the maximum earnout or payout potential of the program.
That's correct.
Gotcha. And Anthony actually threw in a question stated, and this is probably what you just referred to. Back in November of 2022, you were chatting with Anthony in an interview. You indicated the 2023 bonus and targets was going to be based on 15 exahash and a 500 million EBITDA. Neither one of those was achieved. So you're saying similar to that situation, we may be in a spot in 2026 where some of these goals may or may not be met, and that may or may not impact the 32 million.
Yeah, that's exactly right. So when I talked to him about that, I mean, that seems forever ago, 2022. We were talking about that legacy performance stock program back then that had some different metrics. And, unfortunately, those metrics were not achieved. This new program, we've set goals that are rewarding employees based on how Riot stock performs relative to the market. And, we hope we are successful there. If we are successful in achieving these goals, that means our shareholders have also won over that time period.
Of course, yeah. And you said it's the Russell 3000 benchmark, is that right?
Correct.
Okay, and is it percentage-based gain over the 3 years or annual gain, or how does it work?
It's how Riot performs relative to that benchmark over the entire 3-year period.
Gotcha. Okay, appreciate the explanation, Jason.
Yeah.
Now, getting into Corsicana in a little bit more detail. So the fun stuff here for you, I'm sure. As you said, you love talking about Corsicana, and I would too if I had the
record. Corsicana.
The golden grail of Bitcoin mining. And Anthony and I are coming down there, actually, Jason. You've been nice enough to invite us, so I can't wait to see that. We'll make sure we get some videos and footage down there to share with you guys. But as you mentioned, Corsicana, you've been working on this for some time. It's energizing now, continuing to ramp up through the rest of the year. What is the hash rate currently energized at Corsicana? And is the company, I guess, kind of what are the milestones throughout the remainder of the year for Corsicana's energization?
So first, stepping back, when we started, Corsicana was an opportunity because it was a piece of land adjacent to a switch that had about 1 gigawatt available for us. As you just talked about, that type of access to power is very rare. These opportunities do not exist. I'm not sure if there will ever be another 1 gigawatt site again, as there's so much competition out there for available capacity. But we were able to take this. We got 1 gigawatt approved by ERCOT's Large Flexible Load Task Force, and we got to work. What getting to work there meant was a few major steps. Even before getting to this point, we had to transform this entire imperfect part of land into a piece of dirt, into a facility capable of supporting 10 buildings and 1 gigawatt. That was an enormous amount. That was an enormous exercise in civil engineering and ground and earthwork to accomplish that. The next two things that we had to do was we had to build 2 substations. A lot of people are building substations just stepping down 138 kV power. We had access to 345 kV power here. So we had to build a 345 kV substation that got a line from that switch across the street. And then we had to build a 138 kV substation down to there. And then we stepped down to our medium voltage at the buildings from there. So all of that, and the lead times that go into procuring these high voltage transformers, these things can take up to 2 years to get now. Because of the work that we put in back then, these things we were received and we were able to energize this past April here, which was the major milestone for us. Getting power into that site, energizing that site is the major milestone. The steps from here are incrementally building out these buildings. Not easy, still a challenge, still things you're dealing with, but we really viewed a lot of the work, all of that work that we did in the past 2 years as really instrumental to getting this point that we can now start turning miners on. So we announced the energization of Corsicana just a few weeks ago, and we announced that mining operations began there in the first 100 megawatt building A1. So we only had a couple weeks after flipping the switch there of operations and deployments in the month of April. So we only added, just shy of 200 petahash that month. But, once again, very, very limited period. That first building A1, that is basically all complete now. So 100 megawatts of buildings that will have almost 4 exahash is nearly completed there. So we are now incrementally turning on tanks and systems in that building and getting more and more miners online. Right on the tail, we have 2 more buildings buildings A2 and then building B1 that we are making the preparations on that we can begin energizing miners there. And then we'll have building B2 following in the summer. So lots of work out on that site to add hash rate and get Riot's overall hash rate up.
Yeah, I've taken a lot of looks at the pictures, and just the retaining walls alone, it looks like, are quite a feat there, Jason. So I understand what you're saying. Getting that initial base set up was one thing. Now it's almost rinse and repeat of these buildings. Hey, still obviously a lot of engineering and electrical and all the rest, but you've done it before. Now it's just rinse and repeat, eh?
Yeah, and we procured the difficult equipment. We have the transformers out there. We have the tanks out there. We have all of the miners for the first building A1 are out there. They're getting deployed into tanks and they're turning on. So it's really kind of just these incremental step-by-steps here, each completing a part of the building, energizing medium voltage transformers, getting the tanks turned on, commissioning these tanks, all of these things that we're doing on a massive scale. We're talking hundreds and hundreds of immersion tanks per building. These are the incremental steps we're taking now to get more hash rate online.
Yep, makes sense. Now, based on all of this activity and growth, how would you say you're tracking to your targets, both kind of the mid-year for June here and end-of-year exahash goals?
Right. So our mid-year hash rate goal was 21.4 exahash. So that would be by the end of the second quarter. From where we are today, we're on track for that goal. Our end-of-the-year goal is 31.4 exahash. We remain on track for that goal as well. It's really thanks to the incredible team out there. We've not only the existing team that we had, but the new faces, the new help that we've been able to add on, hiring in the community out there in Corsicana, Texas, that has built up the troops on the ground. And we have an incredibly motivated, talented, smart group of people that understand their objective is to increase Riot's hash rate. And they're jazzed up on that, and they're executing every day, 24/7, to accomplish that goal.
Perfect. On pace for both. It's music to our ears. Now, I want to talk about the HODL a little bit as well. This was a really interesting question. We're starting to see, obviously, Jason, a divide between the daily sellers and the HODL. I'm curious to get your exit planning, and obviously maybe not a lot of detail at this point, but what are you guys going to do with all of these thousands of Bitcoin once you feel like we're at a top or the cycle's maturing, or what is the exit plan for this Bitcoin?
I think as a Bitcoin company, Bitcoin is the exit plan. We are on plan B. We're here because we believe in Bitcoin. We're not here, a lot of people maybe look at mining as just a simple commodity business, which it is. But our purpose as a company, the ethos of Riot is not to be a commodity business. It's to be a Bitcoin company. So we are here because we believe in this tremendous upside with Bitcoin. And we believe with the advantages that we have with our power, we're able to accumulate Bitcoin at a cost less than its market price. And that is an incredible efficiency and advantage that we want to scale up and press. So we hold the Bitcoin on our balance sheet, not with a plan in mind to liquidate. Of course, we always had that option if for some reason that was necessary. But our objective is to hold Bitcoin on our balance sheet, to give ourselves upside to Bitcoin future, to a Bitcoin future. And that's something that we're really passionate and we believe about. I think with the introduction of the ETFs and these new vehicles to bring capital into Bitcoin, the prospects for this space have never been brighter. There's 21 million Bitcoin, and ultimately there's unlimited demand for Bitcoin. So we have 8,500 of these things as of the end of the first quarter, and we don't want to lose that piece of this fixed pie that is never going to increase. So we're continuing to evaluate on a monthly basis what we do. We have CapEx requirements, we have OpEx requirements. So it's an ongoing management decision whether we're retaining Bitcoin for the month or selling Bitcoin. But we believe the best thing that we can do for ourselves as a company and our shareholders is to hold as much Bitcoin on our balance sheet as possible.
I love that answer, and I'm a big Bitcoin maxi myself. I find myself gravitating towards the HODL strategy because of that really that change we're seeing worldwide on how fiat currency is viewed and how hard money and Bitcoin interact with our society. But it is a core fundamental difference. And I appreciate you bringing it up, Jason, because again, Rob yesterday, he comes from a traditional commodities mining background. I know Paul Prager at TerraWolf. These guys look at this as an opportunity to make revenue, sell it off, and very much commoditized business. But you're saying that you guys look at this completely as a transformational technology, and you want exposure to that long term, hey?
That's right. We are here because of Bitcoin, and there's different ways to approach this business. It's not to say one is right and one is wrong. At Riot, we have chosen this approach. We want as much upside to the future of Bitcoin as possible. And so for that reason, we've aimed to retain as much Bitcoin as we can on our balance sheet. Historically, we've sold some as well. So, it is an ongoing decision, and there's certain external factors that may drive changes to that strategy on a month-by-month basis. But the important thing is we're here because of Bitcoin, and we want as much upside to that future as we can get.
Yeah, makes sense. Now, closing up here, Jason, I just wanted to follow up. I know you just put April results out recently here. Extension of that is, when do you expect the Rockdale facility to get up to their optimal hash rate? April was obviously underwhelming in terms of Bitcoin production compared to where a lot of people were forecasting or estimating this to be. However, we still got those transaction fees and things. Do you have any comments on April results there, and when we would expect to get up to those numbers we anticipate with the exahash you guys have?
Yeah, unfortunately, April production results, impacted by hash rate that's offline, problems that we've been dealing with some miner models that we're now resolving. We have begun to receive the new MicroBT M60S miners this month. These shipments will continue. We're going to be taking these miners. We're going to be replacing some of the problematic models that we have out there. And that is going to help not only boost our hash rate, but boost our operational efficiency as well. In parallel at Rockdale, we are preparing new capacity. So some of those miners that we're receiving are replacing existing miners. The other, about half or so, those are actually going to grow our hash rate. So that infrastructure is getting ready, and those will go in there, and that'll take Rockdale to 15 exahash when completed. So that all of this is incrementally happening over the next couple months. We forecasted it all to be completed in about July. So we think we're going to have some strong incremental results here, getting the hash rate up at Rockdale as well, in parallel, while we have all this work going on at Corsicana. We're also getting into the summer months here, where we have the opportune times for our power strategy. So when there's these limited windows of peak of volatility in the power market, and power prices shoot up, and we're able to leverage our long-term power contracts and respond to that. That both stabilizes the grid that we operate in. ERCOT just put out a report how Bitcoin miners help stabilize the grid during the solar eclipse. That helps stabilize the grid, and that helps lower our cost of power by getting these credits that offset our power bill. So excited to have another summer of this. It's hard to predict what it looks like. It's largely driven by the weather, how different generation assets perform. It's to be determined, but that's another positive factor that we have in our forefront here that would help lower our cost to mine, which is incredibly important here for post-halving.
Yeah, and that was actually a final question here. Do we have any cost per coin metrics you can share? I know you mentioned your pre-halving cost per coin on electricity at an all-in basis. Do you have any indication of post-halving that you can share with us?
I don't have a detail I can share with you. I can kind of talk through how to think about it. For the first quarter, our energy cost per Bitcoin was about 16,800 per coin, net of our power strategy. And then that all-in direct cost, which includes a bunch of other expenses, was about 23,000 per Bitcoin. So all things remaining equal, post-halving, that cost would double. In this case, there are things that offset that quite a bit. One, we're looking at a first difficulty decrease here coming up. I believe the current estimate is just shy of 5%. At the current Bitcoin price, that decrease in difficulty will probably continue. I think it's to be determined. We'll see. And then, as I mentioned, we're going into the summer months here, where we get to really activate our power strategy during these discrete windows of time, and that should help lower our costs. So, things working for us and against us. The halving, that doubles everyone's cost per coin, all things remaining equal. low-cost producers like Riot will benefit from the decrease in difficulty. That'll help lower our cost per coin. And then unique to Riot, executing on our power strategy here should result in for offsets to our power bill and have a positive impact, reducing our cost per coin as well. But we will see. You know, like I said, it's like predicting a market here. How is power going to trade? What is the weather going to look like? How is solar and wind going to perform? The market is pricing in that there will be some volatility this summer, but we really don't know until we get there.
Yeah, it's very complicated stuff, and I don't think anyone anticipated the difficulty post-halving to be as high as it was. So it'll be nice to get that reduction like you talk about. So final one for you, Jason. We've talked a lot about Riot, the growth, the different elements of this company, the HODL strategy. Right now we've got those top kind of 2 or 3 miners going at it for the top production, the exahash, the HODL. Why should people invest with Riot as opposed to one of these other pure play miners?
Well, I think Riot is a pure play miner in that we have a sizable operation that is increasing significantly in scale this year. We have pursued a vertically integrated strategy for years, and I think that has been proven to be the ideal strategy when you approach Bitcoin mining. Right now, with the growth that we have, we're scaling that low direct cost per power over a bigger and bigger scale. We're increasing our hash rate on a capacity factor by 154% this year. When you think about it operationally, we expect it to be even higher. So Riot is one of the few companies that can say, as a result of our growth plans, we expect to be mining more Bitcoin at the end of 2024 than we did at the start of 2024. And underpinning the huge growth opportunity that we have in front of us, a 1 gigawatt pipeline that is unmatched in this industry, is this strong balance sheet that allows us to act on that, continuing ordering the components we need, and scaling that up to reach its full potential. So we think we have a growth pipeline that is really unmatched in this industry, and we're really excited to show what Corsicana is, the new technology we're using there, and how we are getting better at Bitcoin mining as a result of that, and then replicating that advantage over and over and over again. So it's going to be a great next few months showcasing these results.
Yeah, we're excited to see them. It sounds like it all comes down to execution now, Jason. Yep. Anthony and I can't wait to get down there next month and see it all in live action in person there. So thanks so much for your time today. We really appreciate you going through these questions. Congrats on Q1. And you guys, if you're still watching at this point, make sure you hit the like button. Feel free to subscribe to the channel. Jason, I'll throw it back to you for any closing thoughts, but thanks so much today.
But yeah, thanks for having me on. Appreciate the platform to talk about what's going on here. We're really, really excited about what's going on. We know that Riot's growth has been very back-end loaded. If you think of the past few years, we did not increase our hash rate or grow during 2023, and for the first part of 2024, we haven't either. It's all been back-end loaded with this big new facility, Corsicana, coming online. So stay tuned. We're really excited to showcase not only the scale of what we're doing, but really how we're doing it and the new leaps in Bitcoin mining infrastructure that we're using to accomplish that.
There you have it, folks. Sounds exciting. We'll catch you soon, Jason. Thanks so much, and we'll see you guys tomorrow.
Awesome. Thanks, Bryce.